the same height to the downside. Now, when you measure it, that is where you are expected to take your profit. After the break of this neckline, ensure that you take your profit here. If you enter here, you can wait for the market to get to this place, or you can still take your profit here for those that are aggressive. But if you are a conservative trader, after the market has broken this neckline and retested the neckline, if you enter from here, you are expected to take your profit here. The same length from the top to the neckline, measure the same to here. That is your take profit. The same thing that occurs in double top is the reverse in the double bottom. It has the first bottom, the first first bottom here, and then the second. Now the market goes to create the W, which is the neckline here. Please, mute yourself. Sir Josh, please give me co-host. Let me pick out some persons. Make me co-host, please. Okay. So the same thing that happens here is the reverse in the double bottom. And so you and I, we are going to enter the chart. We are going to locate double bottom and then see how this double bottom reacts whenever the double bottom and the double top reacts on the chart. I told you, whenever you see the double top is for a sell. Whenever you see the double bottom is for a buy. And I'm also going to show you at some point they are used as a continuation pattern. Now let me remind you that this double top and double bottom is a reversal pattern. So let's see how it acts as a reversal on the chart. So let's see. Like, for instance, I'm going to show you something. This is Brent, though we have not gotten to that, but Brent showed something before it started falling. Oh, that's not where we are going. Let's look for double bottom. Okay. This market is preparing for a buy. Let me see. Okay, it's moving already. So if you look at this, because we want to locate double top, double bottom, look at this. This is a double top. First top, second top. It started falling. This is a double bottom. This is H1 time frame. Look at it. It started buying. As soon as it printed this on key level, you can see those levels. I marked them. Look at this level here. And this level, if you draw it very well, it will be on your cycle number, psychological numbers, area of values. So let's locate them. Let me just minimize my screen. We'll be looking for double top. This happened to be a range before it did the second top. So we can go to the higher time frame. Look at it, double top. Look at it. Look at this one, a double top. This one, I will take it as a triple bottom. Okay. I will not be the only one. You can unmute yourself whenever you spot them. That's why the class is interactive. So let's locate them together. Unmute yourself. Let me go to lower time frame. If you see a double bottom, it show me. Any of the time frame can show you. Any of the time frame can show you this sign, these patterns. Let me minimize this a little.
You pass one double bottom.
I passed one.
Yes, sir. I've been seeing many of them.
Where? This is a ranging market.
Pause
This is a
here.
ranging.
Okay, I
This
think here.
ranging market. No, this is a ranging market.
Okay, sir.
So
Okay, wow.
let's go again. What can you say about this?
This double bottom.
Double what?
Double top.
Double top.
Double top. Okay. So let's go. Now, let me make something clear. The textbook double top and double bottom, you discover that the top and the bottom, they are textbook double top and bottom. You discover that they are equal, the height, but on the price in real life, it's just like when we say in economics, I did engineering, electrical electronics engineering, so I may not call it very well. They say ceteris paribus, which means all things being equal. And when you come to real life, all things can never be. The price of fuel in Nigeria cannot be equal. The black market is 400 per liter. Fuel station is selling some places do something. Some places you can see it's not equal. You see the poor, you see the rich, you see the middle class. But textbook is saying that this head and this head, please mute yourself. Now, textbook is saying that these two heads or these two bottoms will be equal. But I'm telling you that in the life market, real life situation, in engineering, we say ideal. In ideal situation or condition, everything being perfect. Why on earth here in real life, nothing is perfect. It's only God that is perfect. So when you go to the chart, you cannot see anything. You will see sometimes, you will see this equal, the two of them being equal. But most times, they are not equal. Okay? So I just want to bring that to your notice. So let's go in search of it. Any of the time frame, I'm just scrolling. If you see it, tell me. I don't want to do the class. Let me be the one to be finding it. No, if you see it, bring call my attention. Is this a double top?
Yes.
Hello. Okay, that's a double top now. What of this one? Is it a double bottom?
Yeah, it's a double bottom on a very long range.
Double bottom.
Double bottom. Okay. Now,
On a
one
very
thing you
long
need to
range.
know. Okay. One thing you need to notice in this, while we are coming to the chart, is for you to see how the market reacts whenever you see these patterns. Yes. Now you have seen double bottom. Did the market buy? Yes or no?
He buy.
So if you look at this thing here, if you go to the lower time frame, you will discover that this thing here is a double top. Let me see. Look at it. This is the first one. This is the second one. At some point, he even wanted to press this numbers head and shoulder. This is not a double top. So let's go. This triple bottom. I'm just taking it to the higher time frame so that we'll see it to spot them. They are all there.
Look at double
this.
bottom.
This one, Abby?
Yes.
Okay. Look at another one.
Yes.
So let's just be going. We'll be seeing them. You can see this place. What can you say? Is there anything like double top there? Double
Yes,
bottom?
I can say double top.
Double bottom.
This is triple bottom.
There is one you've passed.
If you look to the left, I think there's a double top there.
Which one? This one?
No,
Okay,
come to the
this
left.
one.
Yes, sir. Yes, sir.
That's triple top.
That's double top.
Yes, sir.
Double top. Okay. This one, double bottom.
Yes. Now, I want to ask, hello?
Yeah. Yes.
In this double bottom, now how can you measure it?
I'm going to show you. Look at, okay, this is a double bottom. Abby?
Yes.
Now, just like we said, we want to measure. This is the neckline.
Yes.
Let me take, this is the neckline. This is the double bottom, the 1, 2. Now we want to measure. We said, come to this. Look at this, your trend line. Drag from this top to this your neckline. When you drag from that top to that neckline, carry that same trend line that you just dragged and dropped. Okay, let me show you. Take it from the middle. Just carry it. When you carry it to this place, this is where you are expected to take your first profit. For those that are not greedy, you know, some persons, since they taught them that over 7.2 trillion US dollars is what is being exchanged in this market daily, they want to collect the 7.2 trillion dollars and put in their pocket just in one day. And if you check their account, what they will see there is just $100, at most $10,000. What is $10,000 inside 7.2 trillion? So they want to stay and collect everything in the market, which is not possible. So what you do, collect the little one you can and leave the market.
And go for another one.
And go for another one. Very simple. Now, if you measure from here to this neckline,
this is 3 pips now.
327 pips.
Okay.
This is H4, 327 pips. If you are able to see this on H4, double bottom, after a sell from this high to this low, entering a key level, and you measure this, you now measure it back again. If you should enter this market here to this place, 334 pips, that is enough now. If you are using 0.1, that is $334. And you make this $334 in just 1 week.
0.01, sir.
0.0, no, 0.1. If you are using 0.1, it's
Okay, sir. How about 0.1? 0.
What about 0.1, sir?
0.1 times 10, that is 3,000 something dollars.
So I want to ask.
How about 0.01?
If it is one, if it is one, which is one standard lot, 1 pip equal to $10. So if it moves 330 pips times 10, that is how much? 3,300. If you are using one standard lot. But if you are using 0.1 and it moves 330 pips, it means that you have taken $330 because 0.1, the p value is 1 pip equal to $1. So 330 is $330. But if you
I'm
are
using
going
0.01.
0.01, that is when you see that 50 pips equal to $5. So you go and do the calculation.
Hello, sir.
So
I want to ask a question.
yes.
Now with this now, like as you have measured this stuff now, and you have like measuring this, that where it come from, and like now, okay, I've measured this, I've get the measurement of this. So okay, I know that with the measurement of this one, let me use it to go for a buy. Is there any probability that even though you measure it, it may retrace back? Is there any probability like that?
That it may, yes, the pattern can be invalidated. That is why we ask you to put stop loss.
Okay, yes, you are coming to my direction now. Okay, now in this particular stuff now, where can you put your stop loss? Just indicate it for me to see stop loss and take profit. In case
now, because I'm an aggressive trader and I know how to trade using my confluence, when I spot this and spot the second one, and it shows me my candlestick pattern. If you look at this candlestick, it's showing you a morning star, the second leg.
Yes.
Look at it. It's showing you a morning star with a hammer candle, hammer candle everywhere, showing you. If you look at this one, it showed you an engulfing. All this shows you a sign that the market wants to buy. Now, because I'm using confluence to trade the market, what I will do is simply to take my trend line, draw my trend line to confirm this very well. This is the first one. Then I come to the lower time frame because I take my entry from 15 minutes. This is H4. I will go to 15 minutes to take my entry. So my 15 minutes, this market, this trend will pass through here, which will give me an early entry that market has broken my trend and retested on my trend on a key level, psychological number, and also showing me a candlestick pattern for a buy. So I am expected to enter this market here. Come and put my stop loss here. Below this place is where I'm expected to put my stop loss. Here that I'm entering, that is if I am a swing trader. Swing traders take their entry using H4. Position traders, swing traders, but most of them take in H1. So if you are taking that entry in H1, let me see. Now, look at the market. I'm just trying to explain further in order for you to understand this. Look at the market. See in that key zone. Look at it. Look at it. After going up, it went down. Showed you a good double bottom again on that key level. Let me see if this one is even actually that particular one. Okay. Let me go to small time frame. Okay, it can show that. It can show that history because that was H4 and we have really gone down to, this is 2021. So that chart is beyond here. Okay, so we can't see that on the lower time frame. So, but when you go to the higher time frame, you can see it because it can go below that. You can see this is 2020. So that's why. But whenever you see it, you measure it, go to the lower time frame. Go to the lower time frame and take your entry. Then you will see that you will have a very good risk. If this is H1, if I'm entering this market in H4, I may be risking like $50 or $70 to gain more. But if I am on H1, I will be risking less. Peradventure, the market goes opposite against me. I'm risking less. That is why you see people entering. You can see this. So if I'm about to enter this market and I've drawn my trend line, because you don't trade this alone, you trade with confluence. This market broke using double bottom. It broke and retested. I told you to measure. If you want to do measure, for those that want to make, to know the profit, the place you are supposed to take your profit. Now, you measure from here to here. This is 61 pips. You measure another 61 pips. Look at it. This level here. Okay. Now, if I am to enter this market, this is where I will enter this market. This candle here. This key level, rejection of the hammer. I will enter this market here. And if I enter this market here, because what I give as my stop loss is maximum of 35 pips. I will measure 35 pips. This place is just 26. So 35 pips is still below this place. Then I will now take profit times 2 of that 35 pips. If you look at it, times 2 is about how much? 70 pips. So this is 70 pips here. That's the first take profit. The market will now come. By then it has broken. All these things, you are seeing it because the market has already done this, so you can interpret very well. But when you enter early, you take times 2 or times 3. 1:3 risk to reward ratio. If you are taking times 2, is good. If you are taking times 3, better. Because sometimes you will lose in the market, but when you win like 3 times and you lose 7 times, you are even more profits in the market. So we are going to still teach you that in the fundamental, how to do your risk management. It's not part of today's class. So why I'm just stressing on this is to enable you know how you can enter this market using double top or double bottom, and
Hello,
also where you can expect your take profits. Yes, ask your question.
yes, sir. What I want to ask now, imagine I've seen this double bottom in a 1 hour time frame, and then enjoy my trend line to determine when it's retest. I might join the trend line in that same 1 hour time frame, or I'll join it in a lower time frame.
If you saw it on a 1 hour time frame, you can go to 15 minutes or 30 minutes time frame to
Okay.
draw your trend and take your entry.
So I will also take my entry in that
on a
lower
lower,
time frame.
on a lower time frame.
Hello, I want to ask a question. Can you hear me?
I can hear you.
This like as you said, this double bottom. after during the, let me say, where it comes from and where it's about to go, maybe to buy, and you are using 1 hour time frame, then is it any possibility that with your 1 hour time frame you can achieve your goal?
In 1 hour time frame,
Mm.
you can achieve your goal even in 15 minutes time frame, depending on the type of trader you are.
Depending on the hours, no, maybe the minutes you are using.
Now, listen. We have different types of traders. We have scalpers, we have day traders, we have swing traders, and we have position traders. Okay.
Okay.
So these traders, they do the analysis separately. They have different time frames. They do the analysis, and all of them, they are making profit in the market. Now the question is, what type of trader you are? If you can identify the type of trader you are, then that will help you to know the time frame that you should be doing your analysis. If you are a position trader, you can't be doing analysis on a H4 time frame. No, you will do analysis from monthly time frame. If you are a day trader, you should be doing analysis from daily H4, H1. Okay.
Okay.
If you are a scalper, that you don't have anything to do with daily time frame. The highest time frame you can go to is H1. Your time frame to trade is 5 minutes, 15 minutes, 30 minutes. So all of them, they have different time frame they are using to trade. So it depends on the type of trader you are. That is where you do your analysis. The drawing you are drawing is depending on the time frame you are doing your analysis and where you want to take your entry. So you should ask yourself the question, what type of trader are you? Then the next question will come, where should I now take my analysis? What time frame? After that, then we now tell you where you can get earlier entry in the market, the time frame that will give you earlier entry without much noise or fake out in the market.
So, sir, how do we know the
Sir?
type of trader we are?
No, I'm still
That is
asking
not.
question now.
Can
you
we
hear
keep
me?
the question after the class?
Yes, sir. Please
Let
move
me
the
just
questions
let me
after
just
the
let's,
class.
answer this one.
let's continue. I will
You just say something now.
just keep your question. As soon as I'm through with the next one, we are going to put all the questions together, and then you can shoot me anyhow you want.
That will be much better, sir.
So we'll not be distracted. Thank you very much. So let's go back. We have seen why I'm taking you to the chart is to enable us see how these patterns, the double top and the double bottom, if they are really being obeyed in the market. Now, for instance, if I ask you, how many times, that is why you need to do your own back test. I have taught you. You need to go and look at your chart. Look out for double bottom and double top. When you see a double top, write it. Check, did it obey? Did the market obey it? You say yes, you tick yes. You see another one. Did it obey? You tick yes. If you are able to spot it 20 times, out of 20 times, how many times did the market obey the double top or the double bottom? And how many times does the market fail to obey the double top or the double bottom? If out of the 20, 15 times the market obey the double top and double bottom, it means that you can put your money to trade that double top and double bottom. I hope we are following. Hello?
Yes, sir. Yes, sir.
Yes, we are following.
Because if the market can give you 75% of the time a good trade, 75% of the time, you have a winning trade with that pattern. It means that pattern is good for you to invest your money. What we are seeing here, we are not talking about to see double top and double bottom. We are looking at these things for it to give us an edge, a leverage for us to invest our hard-earned money, not for us to just spot double top, double bottom, and then it's as if we are playing game. We are not playing game. We are not doing Bet Naija here. You should take all these things into consideration. How many times is this market capable of obeying double top? If we cannot obey it up to 10 times, up to 15 times, it means I shouldn't put my money on trading double top or double bottom. It's not relevant for me to trade it. So what I should do is for me to look at for another pattern that I know the market obeys multiple times than it fails for me to put my money. That is the essence why we are learning these things. After you have learned this thing tonight, go and do your own back test. Open any of the charts, Euro USD, GBP USD, USD JPY, any of the charts. Go and check it. When you have checked it, you can only trade double bottom and double top and make money in this market when you spot it on key level. Draw your trend line. Did it break and retest? Enter for a buy or for a sell. You don't need a profit. You don't need to be waiting for signal. The people giving you signal is the same thing that I'm teaching you now. That is what they are using to give you signal. And you'll be asking, where should I enter? You are now being taught how to generate signal. That is why you are here, and not to depend on people giving you signal. What if a day comes, the person decides not to give signal? That means you will no longer be trading forex. The essence of you being in this class is for you to know how to generate signal and to also give people signal. That is why weekly analysis, we call you, come and give the chart, your analysis, where you are expecting market to go this week. It's your analysis. And what is the analysis? You have seen a pattern. You have seen something. Come and tell us, what is your bias? Is the market going up or is going down from your analysis? And if you discover that 5 people, 3 persons, 4 persons are saying the same thing, it means that that signal is correct, because 10 persons cannot be doing different kind of analysis using different strategies, and they are coming to say this market is going up or is going down and be wrong. No, they can't be wrong, except there is a fundamental that is going to change that market for that week. So that is the reason why we are here, for you to be a signal provider. You can generate your own signal. Let me not stress myself too much. Let's go to the next one. Now, what we have here now is the head and the shoulder, which is also a reversal pattern. The head and shoulder, also a reversal pattern. You can see it. Let me open this other chart. Head, shoulder, neckline, head, shoulder, shoulder. This is head and shoulder, and also inverse head and shoulder. Whenever you see this thing on your chart, know that the market is about to reverse. You don't need a prophet to tell you, uncle, buy the market, or auntie, sell the market. The market will give you a pattern that you will see. It will always give you a pattern. It will give you something. Market cannot be buying and all of a sudden you see market turning and be selling. It is not possible. Even if the news, there is a news that turn it, the market will continue in that direction. If there is a news, the market just turn far. It is going up, the market just turn just like that and go back. It's not possible. After turning like that, that market will turn back and go the same way it has been going. It's just going to go and hunt stop loss. That's why you are advised to always put your stop loss while trading the market. because you are trading economy of nations, economy of institutions, economies of commodities. For those that learned basic, those that joined the basic class, they taught you about economy. That's the first thing they taught you in the basic about economy. You are not trading. What will I even use to compare it? So this is head and shoulder, and this is inverse head and shoulder. This head and shoulder also has a neckline, just like the double top and the double bottom. If you look, the first shoulder came, created a neckline, went up again above this one, created, this is one, came down, went up, came down, went up, and then before it started falling. Neckline. The same happened here, went up, came down. Let me delete this one, I didn't get it. It went up, came down, up, come down. Head, inverse head and shoulder is just like any human being that has a head at the middle, has a shoulder, and has another shoulder. So after the market has created this and you are seeing it, my brother, my sisters, you don't need a professor in this market. You don't need a prophet to forecast, to tell you, prepare for a sell or for a buy. Start looking out for what you want to see for you to engage that market. Let me even show you something. Let me take you directly to the market. Let's begin to spot out for this because of time. Let's not waste much of our time because we need time to answer some of your questions. So let's just go directly. Now, I want to also give you a secret. I want you to research it. This market, for you to spot, you can spot inverse head and shoulder in any of the pairs, any of the commodities. But I have discovered, and yet to be proven wrong, which is why I want to give it as an example. I want to see it tomorrow. Okay? I want to see it within this week, before Friday. Let's check out JPY pairs. They show more of head and shoulder and inverse head and shoulder. It's an assignment, which means if you can be spotting them on those pairs, JPY pairs, it means you are sure of enjoying the market and making good profits. So let's go and spot them. Let's just look out for them. This is H1. You can see this market. I want to even engage this market for a buy. I can engage it for a buy. Look at this. This is a head. This is a shoulder. This is a shoulder. It has broken a trend line with this. It came in deep down to retest. The retest is to go and do, I marked this thing in the afternoon before I left office. These things are not printed. I drew this line here. Should it be I place a pending order, this market would have triggered me and I would have been on profit right now, but I did not put it. This market, I'm expecting this market to break here and start buying. You can monitor it. It can also invalidate it. You can see that this moving average has started even carrying it already. This one is carrying it. So the market still want to continue on the upper side. Look at this place. I told you about double top. Look at this double top. When the market spotted double top on a key level, the market obeyed it. This is AUD JPY. I collected $24 here with this market here. This market, this double top. And not just seeing it as a double top, you can also see that it printed a shoulder, printed another shoulder. Your eyes should be open to see these patterns being created in the market. Don't wait for somebody to tell you that this is this or that is that. The market is constantly showing you these things. Look at this one. Double bottom here. First one, second one. This market broke this line and it retested here. Just be looking out for them. We are looking for inverse head and shoulder. Look at inverse head and shoulder. Shoulder, head, shoulder. How did the market react to it? This is a head and shoulder. Head, shoulder, shoulder. They will not be like your textbook head and shoulder or textbook inverse head and shoulder. Look at this one. Look at it. Head, shoulder, shoulder. This is JPY pair. That's why I'm using it now to show you. Look at this one. Look at it. Head, shoulder, shoulder. If you come here, it may be hidden. It's only those that will see that can see it. This is a double top, double bottom. This one is a hidden head and shoulder, but I will not take that one. So I will not talk again. I want you to be spotting them, head and shoulder, and inverse head and shoulder. Or mute yourself and spot them.
Head and shoulder here.
Where? Here?
By the left.
By the left. Let me see.
There's
Yes, this one.
Where? This one?
No, sorry.
This one and this one.
No, sorry, let's
It's
keep
not a
moving.
clear. Okay. Look at this one.
Yes, sir. Okay,
Let me not talk again. Let me just be going. What I'm scrolling here is a JPY pair. I just took it to a JPY pair. Any head and shoulder? Okay. Nobody.
So you're on the AUP GPY.
This AUD JPY, a JPY pair. You can still go to any of JPY pair. This is Euro JPY.
Okay.
This is a double bottom.
Yes.
This is a shoulder. This is a shoulder.
Yeah.
If you
This is
go
also
on,
shoulder.
now this market, I'm expecting a break. I'm expecting this market to break this place and retest. So if you see it, are you seeing anything?
Yes, sir.
What is there?
Head and shoulder.
Where is it? This one or this one?
Yes, sir.
Where? This one?
This one by the right.
This one?
Yes, sir. I think with the head coming up.
If you look critically, both of them are even head and inverse and head and shoulder. Look at this one, shoulder, shoulder, market, boom, it started buying. Head, shoulder, shoulder, head, shoulder, shoulder, started dropping. Retested, drop. If you are taking your this thing here, look at it. You don't need a prophet to be showing you how to draw this thing. They have taught you how to draw your trend line. You go to the lower time frame, you draw the big one, go to the lower time frame, draw again. When the market prints and break, creating another shoulder, you enter for your buy. And remember, it's on a key level. Look at this moving average.
Sir, sorry, please, I don't understand. I want to ask something.
Yes.
Please, no, back to the line you drew. Back, please.
This one.
Yes. Please. Now, this trend, these two you draw. Normally, let's assume the chart is on a 1 hour time frame. And now at maybe after we spot this first shoulder here, and it comes to this edge. And you know, the chart will always be a current chart, like other candles have not been displayed except the current one. And once we are to draw this trend line now, maybe
look
we
at
think
it. Look at it. Let me explain what you are saying. Now, for instance, you saw this.
yes.
Let me take something. Let me bring out something now. Wait, don't be offended. Let me bring out. Okay. Now, if you look at this, is one step. Let me still take it back. When a market falls from the top and makes the first pullback and dips down, you as a trader should be looking out for a way of drawing a trend, waiting for a market to come back to that trend for you to engage for a sell. That is if the market is selling. If you miss this market here and the market is dropping, you need to wait for a pullback. For some of you, because you in the advance will be taught about market psychology, your emotion. Some of you are waiting for a market just miss. You say, "Chai, I've missed the market," and you will think that the market will not come again to present itself for you to enter. You will wait for the market to come and do a pullback. That pullback will create a place for trend line. Now, market have done this, come here, done another one, and the market come here. You as a trader should have drawn this line to touch here, down, waiting for market to break this line up for you to engage for a buy. While you are drawing this on a higher time frame, let me say you are taking your entry 15 minutes. You draw this market on H1. What you are expected to do is to go to 15 minutes. 15 minutes, and then go and look at it on 15 minutes. Look at the market on 15 minutes. You drew this market, this trend here, and this market cut through this place. You go to 15 minutes. You should be looking at to draw another one here again. And when the market breaks here, you should be looking out for a retest of it. And when it retests, then you should take an entry for a buy. That is on the lower time frame. Now it's even giving you an earlier entry. If you are not trading or taking your entry on that 15 minutes, if you go back to the H1, to the higher time frame, you can still wait patiently. And after drawing, you see this one print first. You are not doing anything. You wait, it created, and you saw an inverse head and shoulder. Who are you now waiting for you to enter this market? Market broke here. You are still waiting for you to enter the market. If you go to lower time frame, look at what is going to present to you. Look at it. Now, in this case, there was a high momentum that this market broke here without retesting. But in most cases, whenever the market breaks to the upper side, the market will retest first before it will start buying. If it is on the other side, the market will retest and it will start selling. Look at this place. The market broke. When it broke, it came back to retest that level again. And when it retests, it is now when it started forming this, which means you have to be looking out for those patterns, and you have to draw your chart, do your analysis, and wait for market to come to those points you want to buy or to sell. Not you just open chart. That is when you want to buy. That is not how you trade this market. You will lose money. Do your analysis, and that is why you see us every Sunday by 9 p.m. We come out to analyze what we want to trade for the week. We don't wait for the week. Market has started moving. You now see us. That is when we now start to carry our money and put. You are going to lose money in the market. You sit down, plan your week, plan what you want to do, where you want to invest your money. And when you now plan, you now wait for market to come to those places you want it to come before you enter the market. Now, if you have also waited and that market, this market broke here. Now, let's say it's a live market. You should be waiting for this market to come and retest this place. You draw this one, see touch 1, touch 2, touch 3. Because it broke with momentum, you are waiting for expecting it to come for a retest. You wait. Now, let's just be following it. The market refused to come, which means you are not supposed to enter that market. You now see this market come to this place. If you go to higher time frame, it's a key level. Previously, it was a resistance, a support turn resistance. Look at it. This level is where this market is testing now. It's when you have the market eye, you see them. So let's go. Even if you don't enter that market, you now waited for the market. You see, instead of the market to retest and start buying, that market came with a momentum and broke this place. And when the market broke the place, it went back to retests. That is what you are looking for. For those that are conservative, you wait for the retest. When the market retested it, you enter. Since it broke and retested it, what happened? It has been selling. Look at it. It has been selling. Look at it. It has been selling. It has been selling. You now go again. You draw another one. Market broke this place. Look at the market broke this place. And you are supposed to buy because it gave you a weak candle. Marabuzo. You don't need a prophet to tell you how to engage the market. If you are now using a moving average carrying the market means that the market is going up. When the market now cross, I don't know if they have taught you all these ones. Like this market now, I'm expecting it to break and retest for me to engage a sell. But if I go to a higher time frame and I see that the market, look at what the market is doing, is at a key level. Look at it. At a key level. So that is how you engage the market. What I just want to show you is how this inverse head and shoulder, look at this, an inverse head and shoulder. Inverse head and shoulder. He gave you one. He went below. The market went up and came down to that. You are supposed to have marked this level and keep it. If this market failed to break the second one below here and give you a bullish candle, you should be looking out for a buy. Go to lower time. Look, this is the market now. Let me see lower time frame. Look at it. Frame is where you will see a better earlier entry. You don't need to wait. If you even go to 15 minutes, you see a clearer entry. If you draw your this thing here, market has done this and market broke to the upper side. It broke your trend line to the upper side. Ordinarily, even me with, I don't know if it is this class I taught divergence. I taught you. Without me printing it to the upper side, it has created a divergence, signifying that this market wants to buy. And what should I expect? A break of this upper trend. And when it breaks and it retests That is when I should engage this market. So there are so many reasons you have to see things, simple things. You will see in this market that will tell you that the market is about to move towards this direction or towards the other direction. You draw your line. You know what you are looking out for. You know what you want to see. That is how you trade this market. Go again. Look at on that one. Look at on that one. This is JPY pair. I'm just bringing you here. You go and do your own back test. Do your own back test. This triple touch, triple bottom, double bottom. Do your back test. This thing here, if you see it, we feel is a ranging market, or I will call it a saucer bottom. Saucer bottom. You don't need all these so many things for you to. That's why I don't want to even teach you everything so that you will not be confused. Just take the trend line. Whenever I am spotting all these things, for me to enter, I want to see it break, retest. I enter. Except you want to do it aggressively. Leave it. You see a market coming down, you should draw your trend line. You see a market going up, draw your trend line. Look at, okay, for instance, if you look at this market now, it's going up. Are you not supposed to draw trend line here? It has given you a head, a shoulder, head. Are you not supposed to draw a trend? Do it. Let's say you do it this way, because you have to draw multiple. This on that trend showing you that's on the upper side. But what me I always do after drawing that one, I take another one. Whenever there is a break, take from that place. Enter your market. Do not wait to take 700 pips. This is H4. If it breaks, retest here. This thing is 119 pips. Don't go and wait for you to collect the 7-point-something trillion. It's not possible. I'm telling you. You wait till Jesus come. You just be collecting these things small. Some people are only waiting for 30 pips. Now, another pattern I'm still going to show you. I'm going to rush that one. Just use 5 minutes. Is rising wage, falling wage. That is a break and a retest, but when it extends multiple times, it becomes a wage. Okay. Sometimes it's, I don't usually prepare all these things because I want you and me to spot them in the market. Okay. Okay. Look at this one now. This is a downtrend. This is a downtrend. Just saw one now. This is a downtrend. Market is going down. After going down, the market started going up. Using your, even if you go to the higher time frame, you will see that the market is a downtrend. Now, having a downtrend, you now see the market changing, doing a pullback. But this pullback now have a multiple trade and a break and retest, either to the upside or to the downside. Now, first of all, let me show you this. Rising wage. But this looks more like, look at it. Market is going down. It started doing this. Multiple touches. Going up, started doing this. Or market is coming down. It's going up. It started falling down, doing this. Doing this. Started, it's a continuation pattern. Look at. Let's go to the chart. The market is falling. It's falling down. And then all of a sudden, it started buying. You now see market has changed. On the small time frame, there is a change. Yes. But you have to check the bigger time frame to see what is happening. Go and draw your channel. That is where you use your channel. Look at it. Draw your channel. Draw your channel. They told you how to use this. When you draw it, go and see what the market is doing. The market came, test here, come down, test up, come down. And then it broke finally and retested. After retesting, it continued. It's a continuation pattern. It will keep going down. Rising wage or falling wage. You will see it both on the buying and the selling side. Look at the market. The market do not move in one direction. Look at this place. I seen it. It's a falling wage on an uptrend. Market came to this point, sold, went up again, retested, came down to this point, and as soon as it broke, it retested. Wait for it to retest. Don't be the first person to move the market. The market started buying, continuing in that same direction, on that main direction. The market do not want to sell. The market want to gain momentum for it to continue in that direction. So these are some of the few patterns you will spot in the market and you make money with it. If you go to lower time frame, most of them we are seeing here on H1, you will see them clearer on lower time frame. So you go and do your back test, write it down. Where should I invest my money? What do I need to see before I invest my money? Go and look for them. You see them. I'm just doing it because of time, so that I will allow some of you that wanted to ask question to ask your question. Yes, ask your question, ask your question. Unmute yourself and ask your question. Unmute yourself and ask your question. I am in for this trade. I have given it a stop loss level of $9. Look at it. I want to take how much in this trade? 45 is too much. Let me not be greedy. 35 self is too much. Looking at my PEEP level, 9 times 2 is 18 times 3, about 20 something. Abi 27. So let me go to 20 something and keep this market there. So if this market take me out on this, hallelujah, let me even reduce it a bit. Because my maximum is 35, but that's why I gave it that 35. Look at it. This is 33, 34, 35. But let me reduce it. Let me just keep it there. This is where I want to take my profit. Look at here, I marked it. It broke. He bought, retest, he bought.
Sir, can I join you on this trade?
You can buy. Maybe you get your account.
Okay,
Put your
okay.
stop loss. When you buy, put your stop loss, or just watch the market. This is a closing time. It's not time again for you to buy. The market want to close, so you can wait for it tomorrow morning. You look at what has happened before you enter the market, or midnight around 3, 4, or 6 o'clock in the morning before you enter the market. This market will close here and then open between this place, then before it. Now look at when he closed yesterday, did a double bottom here. One leg this side, one leg here. And then he started buying. Look at this one leg here, one leg here. He started selling.
In a double bottom there again.
So it may create another one here. And then if you create the second double bottom, you can enter for a buy.
Hello, sir.
But the market, know that the market is a downtrending market. So don't risk too much. You can put a very tight stop loss. Yes, ask your question based on what we have learned today, not about this trade.
Hello, sir.
Yes.
Yeah, what I want to ask, actually, like, no, to that very current place.
Where?
No, the current picture where you were talking about your stop loss and whatever. That last.
Yeah, I think it was Euro USD.
At this point now, because I noticed something, like since I've been using the demo account, like if you place a trade, there's only one line that moves, that shows the price of the market as it moves. But in the live account, it's always double line, one at the top of the current price and one like at the bottom. The both line moves together.
This acts and big price. This one?
Yes. Yes.
It's your settings now. Do you use laptop?
No, phone.
Your settings. Which of the distinct are you trading? Which of the pair is that?
That is AUD, and I think I traded. Let me check, because I wouldn't sorry. Okay, I traded the AUDJ.
ADJPY. You bought it?
PY and EuroCard. Can you hear me?
ADJPY for a buy? I can hear you.
Yeah, I think it was for a sell.
I don't know. It's sold now. I took money in this trade today.
Yes,
Before,
yes.
And I left the market, yeah. Before I started, because I saw something that the market wanted to buy from that place. Like what we have been saying, when you draw your line, and there are some certain things as you are trading.
What I'm saying is the line, because it like
these two lines now, these two lines.
Yes.
They are not showing.
No, it's showing. It's showing. No, I'm surprised.
Okay.
Like I was thinking it's supposed to be one line.
No. If you're only showing one line, it's not supposed to be one line. It's supposed to be two lines. Now, this line is the ask and bid price. This line is this line, this sell and buy. You have been taught about ask price and bid price. Is that not so?
Yes.
If you open your market watch, look at the market watch. These two lines represent this bid and ask. Look at it, bid, ask. Are you seeing it?
Yes, I am.
So one of them is red, one of them is blue. So they are the price the market want to give you and the price you are ready to sell to them and the price you want to buy from them. So this is where the broker has commission, just small, it's not even big commission, very tiny commission for them to give you this platform for you to trade. Like FS Space now has made the payment for this training. Okay. Now they're only asking you to trade with their platform. You are not paying them anything. The only thing they benefit is that little bonus, which is in every broker. Okay. The tight commission of the spread between this ask, this one, and this one. That is the only thing they are gaining from you. And they are now paying this full class for us. If you want to learn Forex from UTB Trading Academy, you pay nothing less than 150,000. If it is personal class, home class is 500,000. Personal class, 350,000. But they have paid it in order for people to benefit because they understand that the economic situation now is a bit stressful. So they want people to gain this knowledge and trade and make money through the forex market. So you must always have this in your trade,
Chart.
in your chart. Any other question? Please ask your questions. Ask your questions. How many of
Okay.
us are funded with FS Space?
I have funded though, but I'm yet to be added to the Telegram group.
Okay. Apart from you, how many people here are funded?
Funded also, sir.
I have
Yeah,
funded.
Funded.
It's like there's only 3 persons or 4 persons that are funded.
I have funded.
Now, the benefit of funding your account is this. As you are trading, as we are learning together, we spot out entries together. When you see, like we are learning now, we see some certain things. You will go and enter those trades. As you as a beginner, you enter with small lot size, 0.01. Don't be greedy yet. You are not in to make profit first. Yours for now is for you to be consistent, to know how good you are. If your strategy is very good, use small lot size, 0.01. When you use it, as you spot things together, you enter the market, you test the water. If you are not trading with a live account, you are trading with demo, you are just wasting your time. Demo will never teach you the psychology in this market. I am telling you, if you like trade this 6 months, the day you enter, it will even be difficult for you to press enter and buy or sell when you want to enter live account. If you are trading demo, it's just a way. I'm telling you, it may sound awkward, but I'm telling you, if you like, be making profit on demo. As soon as you enter live and you press, say you want to buy, your emotion will be triggered. Now, let me ask, for some of you that are trading demo, you discover that you can enter a trade and go and sleep. Sometimes somebody will remind you, somebody will even remind you that you have a trade, though, or maybe somebody tell you, hey, there's a market. You now remember, hey, I have a trade.
Hello, sir.
Yeah, I'm hearing you.
Can I share my screen? I wanted to, because I pasted a chat in the group and there was no answer to it. Nobody responded to it. So because there is I think it should be on Euro card, or I've forgotten the pair, which I checked. And then I was waiting because it was buying massively. So
who's speaking? Is it
Daniel? Yes. Should I continue?
You can share your screen.
Okay, let me check it.
So there is need for you to trade with live account, fund with FS Space and trade. It will not be good that FS Space is doing all these good things and now you are not trading with them. And it's because of this. Some of the people we have on the platform, they are not serious. Since they are FS Space have decided to give it free, they are not joking. They don't want to take it serious. They are even talking anyhow, dropping unnecessary comments on the platform. Because of that, FS Space have decided that the next people that will be coming into this training, they will pay 25% of the money that they are paying, 25%. After the basic, intermediate, you must pay that money before, if that one not even this thing, before you can join the intermediate. It's because of this unseriousness.
Hello, sir. Can
monitoring. Yeah, I can hear you.
Can you see my screen?
I can see your screen.
Okay, yeah, because this is it. Like at the downside, I already draw this support here. So I was, because I checked. Okay, this is USD JPY. I checked this by, I think that should be around 5-6 a.m. So at this top here, I was expecting it to reach here, because if only if this was it, like if you go checking in the back testing it, there is a line here around this 118.310 up a bit, where this this highest candle is. So I was expecting when it gets there to sell, but I forgot about it while I was on other trade, and then this already happened. By the time I came back, it has come down massively like this. Now at this point, like I was wondering, like at this point, is it advisable to still take a sell, or just forget about it?
No, you wait for it to do a pullback before you can enter for a sell. It's a good market. This market took my stop loss. I entered it
Okay,
on a high. It took my stop loss, and then I left it. I'm waiting for it to do a pullback and do a little crossing. Allow me to share my screen before I can now enter it again for a sell.
Okay.
So stop sharing. Let me take over. So if anyone has question, just wait for that market to do a pullback, and then you can enter for your sell. Any other question, please ask your question. Ask your question. Ask your question now. Now, look at what I was saying. Like somebody asked of a trend line. There are some secrets you will not know in this market until you are told about how these things, this little secret. Now, this double top, when you get to these key levels, or when the market is trending upwards, this market may show you double top at some level, though this one I will tell you in advance. Like what happened, what you are seeing here, this is a key level. Market is still buying massively, and market dropped and created a double bottom here, these two now. If you use another eye, you will see an inverse head and shoulder. Look at it, 1, 2. This is the head. What I did was I drew this here and waited for the market to break. And I told my people, because they thought since it's the key level, some persons thought that the market will just be selling. No, I told them buy this market when this market retests here. Since then, I left the market, I gave them as a signal. And this market has come, done this, and the market bought to this level. Let me even see. Let me see. Where is my crochet? This thing is, look at, if you enter this thing here, you would have taken 30 pips. Very simple. Just using that trend line. When you break and you retest, and you know it's in that direction, continue buying, keep buying. Be a friend to the trend. Very simple. Be a friend to the trend. Do not trade against the trend. For now, what I'm expecting, now, this market that our brother was saying, say drop your number. However, we need to confirm you are funded. Okay. For those that said they are funded, you can drop your number. Let's confirm. Because some are saying we are funded, The thing is, you fund, you don't fund, you are not doing anyone. But what you are doing, you are not allowing others to take the opportunity. That's just what we have to say. If you look at this, it wants to create a double top now. Look at it. It's creating a double top. Now, until it creates a double top, somebody that's aggressive will enter at the top here. This is what time frame. This is H1. Somebody that is aggressive. If you go to the lower time frame, if you go to the lower time frame, a higher time frame, that is when you'll be seeing it clearly. Look at it. We are talking about double top, double bottom. Look at it. It has created the first top, created the second top. So what should you be doing? An aggressive trader is going to enter this market here for a sell. Why somebody that is conservative is going to wait? Because the market is very much bullish. The person is going to wait. If you look at it from daily perspective, I do this thing, I kept it. It is doing a rising wage. Just what we have discussed now is doing a rising wage on a key level on daily. I dropped this thing. I've drawn this thing. That's why I entered it here. It came here, it removed me. I stayed out of the market. You don't need to fight the market. If it does what I want to see, I will enter again and take money, take profit in this market. So I'm just monitoring it. So as soon as that broken, you have left it first. That's why I said you need to wait and look at how it plays. Don't fight the market. Now that market broke here. We want to invalidate this rising wage. They could be doing this to do stop hunting before they will start to sell. Before you know, you see this place, there's no handshake, there's a gap. This market will fall massively this week. Today is Tuesday. Before Friday, this market will fall massively. And then you'll be saying, "Chai, I've missed this market." So they'll be monitoring it.
Sir,
They'll be monitoring it. Yes.
now, like, I want to ask, like, the case of this monitoring, like, because being on demo accounts as, I don't know, I would say maybe too easy. Now, coming to the live account is just somehow. Because, like, what I said happened today, I don't know how I could have managed, balancing the whole trade that I was supposed to take today. Because, like, the AUD, JPY, and the I think I took the two trades I took today, though they were profits, like it went well. But then because I missed out that one, I was on those two. I'm like, how do I balance all these things and watch all these things all the same time?
You took what?
I said, how do I balance and watch all this and observe all these things at the same time without missing anyone?
Are you using a laptop or a phone?
A phone.
That's the reason why now. Phone, you find it difficult to trade with phone. That's why we said from basic, what you should do is to get yourself a system. You can trade with a phone, but it will be more easier and better for you to trade. Like you can see what I'm doing on my screen. It is easier for me to see the whole of the chart, for me to reduce the chart, for me to see whatsoever I want to do in the chart. I will do it comfortably. I can scroll back. I can see whatsoever I want to see and do my analysis, but it's not possible with your phone. But if you are using a phone, I'm not saying trade all these things. I don't trade everything that is here. I only trade 5 pairs. All these things are as a result of people asking, check this one, check that one, check this one, check that one. That's why you are seeing everywhere is filled up. Do not trade everything. You cannot, as a newbie, go and trade only Euro USD or GBP USD and take anyone from JPY pair. Trade 2. Don't go and trade everything. If you trade everything, you'll be losing money. You make money here, you go and throw it on another place. All the market has these different ways they move. If JPY pairs, just like I'm telling you, there are some pairs, If they start moving after showing double bottom, as soon as they change, that market will move for one complete month or 1 week, 2 weeks before they will change direction. If they do a change direction, that thing is a pullback, it's a fake. Like I showed you something now. Look at this one. Somebody will say the market has changed and the market want to invalidate and go up again. Falling wage. Now, I thought about falling wage. Look at it. It's showing a falling wage on a resistance. On a resistance. Somebody entered here. Say, let me say, market don't change. Without drawing line. He say, I no go take profit. And when market broke, he say, now my father be Donald Trump. The market bought and even went and collect the stop loss because the person did not break even. If market is going your direction, break even. That is how you trade this market with caution. The market can still come in your direction, but wait first, let it come. Retest on it. Like what JPY pairs do. What JPY pairs do. Let me put this thing. This is a EMA 50. JPY pair will come, break 50, go and retest it and start falling. If it goes back, break above it and start going up, it has invalidated it for that time. Concentrate on still continuation of the market. Like this one now, I am seeing that this market, it can go down, no, but I'm seeing that this market may go up. Possibility of going up is high. But it's still on both sides. So just watch the market. Do not trade everything. We are not telling you from experience. So please, for those of you that have not funded, go and fund and trade live. Demo will not help you. Demo will not help you. It's a live account that will help your trade. There's no way demo will help you. When you enter live now, you will enter trade. You will even be dreaming your chart. If you have a live trade, some of you that have the live account, you have dreamed that your market is going again. You wake up from sleep. You see somebody is testifying it. You will be sleeping. You have a trade, and you will see your chart. Say, I'm having drawdown. Maybe you haven't having profit. You will open your phone and check. And you see profit. Say, thank God.
Just wake up.
So that is the difference between. But if you are trading with demo, there is no way you will wake up. You cannot wake up. You will just sleep. Tomorrow morning, you just forget that you will have a trade. It's now sometime you just check phone. Hey, I get trade though. That is not trade. That is you are playing. It's hobby. You are not investing anything. So that's how it is. So tomorrow, same time, please let's talk to others to join this program tomorrow. We started late. It's just a 2 hours program, and then we'll move. Space for giving us this opportunity to enjoy this class. Thank you all for being
so much, sir.
Thank you.
Really grateful. Sorry, sir. What are the 3 pairs you called again for newbie? You said Euro USD.
Go and trade
G-
Euro USD.
Okay.
Trade AED JPY.
Okay.
You can trade CACHEF
Okay.
and AED NZD. Those ones, they don't move. They don't move fast. They have low P values. So trade those ones as a newbie.
Okay.
Don't go and trade gold. Do not trade gold. Do not trade oil. Except shop the signal, you will blow your account. Do not trade Bitcoin. Do not trade GBP JPY. Do not trade AUD. those ones has high volatility.
All right, sir.
So do have a nice day.
Thank you very much, sir.
You're welcome.